Alright, we have already seen what is GST, what was the need to introduce GST, and how it was launched after getting delayed multiple times over 17 years. Now let's get to the heart of the matter. How is GST taxed? As we know, GST is a multi-stage tax. GST is taxed at each stage of value addition of a product or service. Let's understand this with an example of potato chips. A chips manufacturing company buys raw materials like potatoes, oil, salt, etc. The value of these raw materials increases when chips are manufactured. The manufacturer then packages and labels these chips and sells it to the wholesaler, who is better placed to supply the product in the market. After this, the wholesaler sells it to the retailer. The retailer keeps the chips in his shop and markets them, thus increasing its value. GST is levied on these value additions, that is the monetary value added at each stage to achieve the final sale to the end consumer. All the involved agents except the final consumer can claim input credit return. That is, the retailer can claim the input tax paid to the wholesaler. Wholesaler can claim the input tax paid to the manufacturer, and the manufacturer can claim the input tax paid to the raw material suppliers. So the final price of the product is not inflated like in the earlier tax system, and the cascading effect of tax on tax is resolved. Now let's see the components of GST. India adopted the dual GST structure in 2017. India's dual structure has a two-level taxation with a central GST and a state GST. CGST is the tax collected by the central government on an intra-state sale. SGST is the tax collected by the state government on an intra-state sale. IGST is a tax collected by the central government for an interstate sale. If a product is manufactured and sold within a state, then CGST and SGST is applied to it. If the sale happens in other state, then IGST is applied on the bill. Initially, IGST is accrued to the center, and later 50% of it is redistributed to the state where the final product is sold, that is the point of consumption. IGST is also taxed on imported goods. Now let's see various tax slabs of GST. GST slab of 0%. Some industries and products were exempted by the government and remain untaxed under GST, such as fresh milk, curd, products of milling industries, fresh vegetables and fruits, etc. Services relating to cultivation of plants and rearing of all life forms of animals except the rearing of horses, farm labor, etc. GST slab of 5%. Under this slab, the goods of basic amenities are covered, such as sugar, oil, spices, coffee, coal, fertilizers, cashew nuts, sweets, life-saving drugs, etc. The services under this slab include railways, airways, takeaway food, etc. GST slab of 12%. Under this slab, products like cell phones, sewing machine, umbrella, jewelry box, butter, cheese, ghee are covered. The services under this slab include business class flight tickets and movie tickets below ₹100. GST slab of 18%. Under this slab, products like hair oil, furniture, stationery items, ice cream, mineral water, etc. are covered. The services under this slab include movie tickets above ₹100, food or drinks at joints with AC and or liquor license. GST slab of 28%. It covers cars, cigarettes, durable consumer products, high-end motorcycles, pan masala, cement, etc. The services under this slab include racing, betting in casinos, etc.